Welcome, everyone. Welcome our guests. I'm Sebastian Boyer, the approved guy. This is the Kingdom Finance team, and let's start sharing. Here we go. Not so much important how much money you make, because that's always very important, right? We all want to make a lot of money, and everybody's focused on that. Where are we going to invest money and how we're going to make money? But what's even more important is how much money you keep, right? You make $1 million and you have nothing to show for it, then that's just a lot of time that you spent and energy wasted. Most of us store our money in bank accounts with institutions that turn around and put our money to work in their own investments. And then they charge us interest and fees when we need to borrow from them. But what if instead of enriching and empowering the banks of the world, you could store your money in a special account that enriches and empowers you and your family? What if that special account provided you with tax-free compound interest growth, along with the ability to borrow against the cash value of the account without interrupting the compounding interest growth? What if that special account would act as a true hedge for your investments, or in other instances, as a volatility buffer? What if that special account could be used to pay off debt, as an emergency fund, as an opportunity fund, to supplement your retirement plan, and ultimately as part of the legacy or inheritance that you leave behind? That special account does exist and is properly called infinite banking, otherwise becoming your own bank. What it really is a whole life insurance policy, but not just any whole life insurance policy, a mutually owned, high cash value, dividend paying whole life insurance policy designed for maximum cash savings. And it is to be used as the foundational account that all other accounts draw from. Some of the common uses include as an emergency fund, as an opportunity fund, for debt consolidation or a wealth transfer, as a college savings fund, business funding, home improvement, travel or vacation, wedding or special events, as well as a supplemental retirement income. Some of the key benefits include guaranteed compound interest growth, tax-free and deferred growth. The money is liquid and inaccessible, protected by the death benefit, protection from litigation, currency standard protection, and it gives every dollar several jobs. You're building generational wealth and you have living benefits. So it's very simple. Our cash flow and income that would normally sit in a savings account or get spent frivolously is going to be directed into a whole life high cash value policy. And then from the whole life cash value policy, we're able to borrow from there to fill in the blanks. Now, that could be to pay off debt. That could be to invest in the real estate market. That could be to invest in Bitcoin. Whatever it is you want to do, you can use the money infinite ways, infinite times, why it's called infinite banking. Now, if you couple that up with a living trust, that equals generational wealth. An estate planning trust, which is typically a revocable living trust, and there are different types of trusts, this is the most simple one, will allow you to avoid probate and create rules and laws in your trust with if-then statements where you can control exactly how your wealth is distributed. So not only are you able to put your assets such as real estate, vehicles, expensive jewelry, mink, any assets that you have into the trust becomes the owner of the asset. But with your life insurance policy, you can make the trust the owner of the policy and you can make the trust the beneficiary. So then inside the trust is the one who inherits the death benefit. And with your laws, rules, and statements inside your trust, you can control how the trust and how your wealth is dispersed to the next generation. So you can literally control how that happens. So, this is a play on words, but your will be done on earth as it is in heaven. Because hopefully we're all going to heaven. That's the plan. And so while we're in heaven, our will, which was written into our trust, will delegate and instruct how that wealth gets distributed to the next generation. Proverbs chapter 13, verse 22 says, a good person leaves an inheritance for their children's children, but a sinner's wealth is stored up for the righteous. Sadly, it is estimated that 70% of generational wealth doesn't make it past the second generation, and 90% disappears by the third generation. 74% of Americans don't have 2 months of savings to cover an emergency, and 40% have no retirement savings. The average American household is paying $1,583 in debt payments every single month. That's just about $19,000 per year. And over the span of 30 years, that equals $570,000. What if there was a way to not just pay off that debt, but transfer it into wealth? What if you could transfer the debts that you owe from banks, creditors, and vendors to debts that you own inside of your whole life insurance policy? That is called a wealth transfer. When you pay it off, instead of having an empty bank account, what's left is a whole life insurance policy with cash value that will continue to grow for the rest of your life instead of an empty bank account. At Kingdom Finance Team, we've got you covered because we know that everyone is at a different level on their journey. Some clients need help with credit. Some clients need help with financing. Some clients need help with debt. And some clients are ready to take hundreds of thousands of dollars and put it into a policy to protect their liquid assets, grow their generational wealth. So whether you're at the very beginning of your life, you're just turning 18 or 19 years old, or you're a 27 years old, just coming out of college, you're a 45-year-old, 50-year-old person who never saved, and you're trying to catch up, it's okay. Wherever you are on your journey, it's important that you get started sooner than later. And the reason why is no one can guarantee tomorrow. Nobody, right? And not only can we not guarantee our life tomorrow, but we can't guarantee our insurable interest. Our insurable interest our insurability, excuse me. Our insurability just means that tomorrow I can walk out of my house, slip on a banana peel, and not be insurable anymore. Today I'm insurable, tomorrow I'm not. Much less if something worst case scenario, knock on wood, happens and you pass away and you have nothing to leave behind, right? So that's number one. And then number two is the opportunity cost, because as time goes, if you're not growing your money and if it's not compounding, you're losing out on that opportunity. Before you know, 5 years has passed, all of that potential compound growth did not happen because you're waiting and waiting and waiting for something to happen. So the sooner that we take action is the sooner we can start realizing the compound interest growth. We can start leveraging the cash value and paying off our debt, completing a wealth transfer, or investing it into assets. And along the way, if our clients need help with debt elimination, if they need help with credit, if they need help with taxes, asset protection, we have the resources to provide that for our clients. So if you were invited to this meeting tonight by any of our agents on our team, at the end of this call later tonight, you're going to receive an email at some point to schedule a clarity call. A clarity call is going to be about a 30-minute to an hour session on Zoom, one-on-one with the agent who invited you, where you can look at a potential illustration of what a policy would look like for you. We don't push, we don't force. It's the opportunity for you to see what it would look like, and from that, then we have a further conversation. To complete a clarity call, the number one question you have to ask yourself is, how much money am I currently saving yearly? The next question is, how much money would I like to save yearly? And if you're not saving as much money as you'd like, or if you're not saving any money at all, the question is why? The answer to that question is because our savings, the money we want to put into savings, is going to pay off debt. That's the number one reason why we're not saving money, is because we're paying off debt. Now, if you're someone who is leveraging debt and you're investing, then Schedule your clarity call to see how you can leverage your policy to create a hedge on your investment.